Is real estate rental income taxable? In this video, I'm going to show you all the ins and outs. And I think you're going to be really surprised what you find out, because some of you are thinking, well, of course it's taxable. Not necessarily. And in this video, I'm going to show you how you can have some outside the tax circle and some inside the tax circle. It's a fun circle to be on, the outside one, especially. It will make you a lot of money. This video right here could probably change your family's trajectory. Stick around to the very end. I've got a nice little bonus. I just put together some really cool stuff. So stick around to the very end and we'll talk about it. Okay, let's talk about a couple of things. Is rental income taxable? The easy answer to say is, well, of course it is. Okay, maybe, sometimes. Okay, the of course it is somebody that's not sophisticated enough to know that you can put real estate in certain types of retirement accounts that you will not have to pay any income tax whatsoever on it during the time it's in the retirement account with all that income coming in, and then when you go to sell the property on the backside from your retirement account. Okay, pretty slick, right? So there's a couple of things that you need to understand. Rental income is taxable, okay? It's considered passive income on that. Talk to your CPA, talk to your tax person. I'm not gonna get into your tax bracket and all that good. There's depreciation over on the property, which kind of offsets some of the income you're having from there. All of these things are available for you there. That's fantastic. What you're really doing is saying, hey, can I get a 10, 12% return on my money? And if I can get a 10 to 12% return on my money, the depreciation helps me out with that. But as I sell that property, I got to take some of that depreciation back, offset the profit, because hopefully that property goes up in value over the next 10 to 15 years, which is typically the case in the United States. More millionaires have been made based on real estate investing and the stuff we're talking about than anything else in the world, planet Earth. Okay, I'm not inventing the next app that's going to save the world or Uber Eats or anything like that. I'm going to do what I know, real estate. Hopefully that's why you're here also. So those are the things that we're going to look at. Now, let's talk about this thing called a private retirement account. And you might want to write some of this down. Disclosure right now, I am not a CPA. I'm not an attorney. I've helped thousands of people go through this process. It ain't brain surgery, but you need to know what you're doing. Okay, we've all heard, put your hand up if you've heard of a 401k. One, two. Okay, several of you have. Okay, so what people don't understand is you can have a private 401k. So let me talk about this. What is a 401k? A 401k is a qualified retirement plan. That means you have to qualify to participate in it. I cannot go down to Ford Motor Company in Detroit and say, I've heard you got a good retirement program. I'd like to participate. They're like, you don't work here, so you don't qualify for our plan. But I can go to any bank USA and go, I would like to set up an IRA. And they say, sure. And I put the money in there. It doesn't matter if I have a job or not. So I can participate in that. That's not non-qualified. What a lot of people don't realize is with a 401k, I can actually be the administrator and the trustee. So I can determine what the rules are, what the participation. So I'm self-employed, I'm making some money, I want to set myself a retirement account, but I also want to make myself the trustee and the administrator. Now this is very key. Yeah, you can have all these companies out there, Pensco, Invest Trust, do it. But the problem is when you have them do it, doing real estate becomes cumbersome at best, okay? But if I'm self-directed in this and I'm self-managed and self-administered and self-trustee, not only can I do real estate, but I can also leverage it. We'll get to that in a minute. So if I look at a piece of real estate, I take some money from my retirement account, I say, I want to buy that piece of real estate with my retirement account. We're going to keep it really simple. I pay for it for cash. I own it free and clear. It's in my retirement account and all the rental income comes in from that. Okay, not a bad way to do it. So I've got all this cash coming in, the value of the property is going up, maybe 15, 20%, depending on where it is, I guess. Could be 5% if it's in the wrong market. But there you go. Now, Sean, I got all this equity tied up in that property though. Okay, so what a lot of people don't know is if you are the trustee and you are the administrator, I could go up to the bank and go, hi, Mr. Bank, Mrs. Banker, I would like to, this $500,000 house I have over here, I want to do another deal and it's got equity in it. I say, how much do you want? I want $250,000. Okay, we're going to lend you $250,000 using that house as collateral. Okay, so I go buy that piece of property and I fix the property up. And let's say I use all that $250,000 and now it's a $500,000 property because it was horrible when I got it. Now it's beautiful and everybody loves this property. I could turn around and sell that property, okay, right then and there. And all of that, I would pay off the bank the $250,000 and the other $250,000 in profit would be zero tax. Well, tax deferred depending on whether it was a Roth or conventional, but it all has to go back into the retirement account. Why, you ask? Because the underlying collateral that I used to borrow the $250,000, you guessed it, was owned by my retirement account. That is crucial. The other thing I could do is I could keep that property. Let's say that thing was spinning off $4,000 a month in rent. Nice property, nice area of town. I'm paying off the $250,000 loan on that. The rest of that cash flow is all going into the retirement account. Boom. I go to sell it a couple of years later. Maybe I sell it for $800,000. Okay. And every single dime I've got in equity in that goes back into the retirement account and I've got a zero tax consequent or tax deferred depending on the type of account. So the original question is, do I have to pay taxes on my rental income? The answer is yes, unless you're smart enough to set up a private retirement account, self-directed IRA, sometimes those work depending on the company that's doing it, some kind of means where you have control of the underlying asset. Now, this is where a lot of people get confused. But wait, Sean, I took money out of my retirement account to do this. No, I didn't. I didn't take any money out. All I did was use an asset, in this case it was the house, as collateral for the $250,000 loan. So technically speaking, my return on the dollar is infinity because I didn't use any of my own money. Okay, I used the bank's money. They used my house as collateral. Let's say I just went in there and sold the property for $500,000, which was a $250,000 profit. That money, I just increased the value of my retirement account on one transaction by $250,000 without using a dime of my own money. My friends, that's how people with money work it. And you should be doing the exact same thing. So when somebody says, oh yeah, but this rental income and I've got renters, let me tell you something. I will put up with a bunch of renters. My renters are good people. I set it up that way and there's other videos I've got on that. But I will put up with a lot of guff over that if I've got $200,000, $300,000, $400,000 in profit coming into my retirement account, tax deferred or tax free, every day of the week. I love this stuff. Now listen, I've got a brand new course on this. Okay, I just put this together. It is the best I've done in 30 years. I'm going to give it to you for free. Okay, all you've got to do is hit the link down below, higginsmethod.com, click on the information there, and I'll give that to you. On top of that, give me your address and I'll send you out a book, America's Best Kept Investment Secret, and I'll hand out that booklet to you or send it out to you gratis, as they say, free. I will send it to you, no postage necessary whatsoever. So there it is. That's how you get wealthy using rental income. You can pay taxes on some of it, not pay taxes on the other part of it, and watch your wealth grow and go through the ceiling. This is Saen Higgins saying God bless and good luck. We'll see you out there.